Hi guys, welcome back to my YouTube channel. If you're new, please hit that subscribe button and hit that notification bell so that whenever I upload, you get notified. And today we're just going to be dealing with chart patterns. We're just going to deal with how do chart patterns work, how do you identify them, and which ones are the most effective. And just a disclaimer, I won't be touching on all the chart patterns in this video. Most of the chart patterns that are used by NFX students are not in this video. So if you want to find out and know more about other chart patterns that are more effective, you can join our NFX course and everything will be supplied to you there. So you can just hit the number that's going to be at the end of the screen, or you can just check the description box. I'll leave all the contact details if you want to subscribe to our course. Our benefits of having the course is you get lifetime mentorship, you get 6 months free VIP signals, and you're going to be dealing with technical and fundamental analysis on both currency pairs or Nasdaq. So whichever course you choose, both of those will be covered, and you get access to the trading community where you'll be communicating with other traders and sharing analysis and so forth and so forth. So the currency pair course is only $100 and the Nasdaq course is $200. So without further ado, let's get into the video. So Forex chart. What are chart patterns? Chart patterns are patterns that the Forex market forms that help us analyze and take decisions on whether we're buying or selling a specific currency pair or metal or index. They can be identified based on line charts and candlestick charts. If you don't know what that is, you can contact me in with the details in the description box, and I will send you a PDFs that explain line charts and candlestick charts. So the types of chart patterns we have, there are two categories in chart patterns. We have reversal patterns and continuation patterns. Reversal patterns indicate the change of market direction, and continuation patterns indicate a continuation of a specific market direction, right? So with continuation flags, the most popular ones, the first one is a bullish flag. So what you get is the market will be in a bullish direction, and then it'll form like a flag like pattern where you'll have your what, your resistance and your support trend line. And then obviously if the market is bullish and the bullish flag is forming, you're going to be looking forward for buying opportunities, because this is a continuation pattern indicating that the market will continue going in its bullish direction, right? So those are bullish flags. The next continuation flag we have is a bearish flag, which is the opposite of a bullish flag. So remember, in the bullish flag we have overall bullish momentum. Now in a bearish flag you have what, the market driving downwards, and then you get sort of like a flag forming where you will have your what, your support and your resistance. And since it's in a bearish momentum, you're looking forward for selling opportunities, because this is a continuation pattern, meaning that the market will continue in its overall trend right here. So that's the bearish flag. The next one that we have is a descending triangle. So this one is pretty straightforward. You're going to have your market, since it's descending mean downwards, meaning that the market is in a what, it's in a bearish trend, right? So you'll have your market having a bearish trend, and then you have sort of like a consolidation that will form a triangle. As you can see, the triangle is in this form, right? So now you have your triangle, meaning that once you see this triangle, you know that as soon as it breaks out of your what, your trend line support, you're going to be looking forward for selling opportunities, because a descending channel, a descending triangle, it indicates a continuation to the downside, meaning that if your overall trend is bearish and you have a triangle in that bearish trend, meaning that you're going to be looking forward for more selling opportunities, because the market is going to the downside, right? The next one is the opposite of the descending channel, which is the what, the ascending channel, meaning that or it seems like I put the wrong picture, meaning that it's the opposite of the ascending channel. The market will be going where? It will be moving in its bullish momentum, and then you see that the market will form like a triangle sort of, right? Meaning that since it's bullish and it's a triangle, you're looking forward for overall buying opportunities because it's an ascending channel. It's an ascending triangle, meaning it's a continuation. It's gonna continue to the what? To the upside. So that's the ascending channel right there. Next category we have is reversal patterns, meaning that the market will form specific patterns that will indicate a change in direction. So if the market is bearish, a pattern will form that will show that okay, now the market is going to be on bullish, and same with vice versa, right? So reversal patterns, the first ones we have, the popular ones, we have what? A double bottom and a double top, otherwise known as the W formation or the M formation, right? So with these ones, with the double bottom, right, you have your market moving to the downside, right? And then it will bounce off a specific support, right? And then it will come back to test that very same support and make its way up. And then as you can see, this is your neckline, right? And as soon as you get confirmation of what? Of your market passing the neckline, it's a confirmation that this is indeed a double bottom and you're looking forward now a reversal. Now you're looking forward for buying opportunities, right? So that's the double bottom. The next one we have is the double top, meaning that the market will have overall bullish direction or bullish momentum, right? And then it will hit a specific resistance. And then after it hits that resistance, it will go down, come back to that very same resistance, and come back down to what? To your neckline area. And then after confirmation, you wait for the what? For the breakout below the neckline, and it'll signal that this is indeed a double top and you'll be looking forward for selling opportunities, right? So that's the double top and double bottom. These are just opposites. If you have a double bottom, you're looking for buys. If you have a double top, you're looking forward for sales. The next one we have is the head and shoulders. This one is pretty straightforward. The market is in an uptrend, and then it'll hit a specific resistance, come back down to our what? To our neckline, and then it'll pass that resistance and form a what? A new high right here, right? And then come back to our very same point where we had our what? Our neckline, and come back to the resistance where the left shoulder bounced off at, and retest again the neckline, meaning that our only confirmation will be what? A breakout below the neckline, indicating that since we had an uptrend, now we're going to be looking forward for selling opportunities, as this is going to continue being a what? A downtrend right here. So the next one is the opposite of the head and shoulders, what? The inverse head and shoulders. So it's the same thing. You're just going to be having, with the inverse head and shoulder, you're just going to be having a bearish trend, and then you'll have your left shoulder hitting a specific support, bouncing off it, hitting our neckline, coming back and making a lower low and forming our head, coming back and retesting the neckline, and hitting our support where the left shoulder bounced off. And then obviously confirmation above the neckline will indicate that we're now entering our a buy trend right here. So those are the head and shoulder and the inverse head and shoulders. So just a quick disclaimer, guys. Some of the most effective patterns we use at NFX mentorship program, as I mentioned in the beginning of the video, have not been included in this presentation. Only clients that have registered for the course will have access to them, of course, as they paid for it, obviously. So all patterns that are demonstrated in this slide are 70 to 80% accurate. Obviously, you use them based on what? On confirmation. They can't be used as confirmation 100% of the time, as there's no 100% strategy in Forex. So if you want to join the mentorship program, you can just contact this number on WhatsApp or Telegram. Get a hold of us on Instagram and state how many years you've been in the Forex industry so that we can set a schedule based on your experience. So that's it from me. Please do subscribe, drop a comment and like the video. And yes, talk to you again soon.